Hey everyone, John Schulte here of JTS Tax and Financial. Want to go over some of the aspects of the CARES Act that are going to impact you as taxpayers and as individuals and businesses. There's a lot going on in this bill. There's a lot of new stuff that's been clarified as of just a few hours ago. So I want to kind of let you know what I know as of right now, and then hopefully we can use this channel as a way for me to get information out to you on a timely basis, and then to have you be able to respond with questions or comments or experiences that you're having with all of this. We can kind of do that back and forth in the comments section. And I'll also make these slides with links available for download, so you can have this PowerPoint, these slides, as a resource to get to the different web pages and things to sign up that you might want to. So with that said, let's talk a little bit about the CARES Act and what just happened. So Congress passed this huge $2 trillion bill that happened, and the president signed it last week. There's 143.3 million taxpayers in the United States. That breaks down to $14,000 per taxpayer. So this is enormous. The government at all levels is putting money into the pockets of individuals and businesses, just trying to keep things running. Hopefully this is all temporary and as short as possible, but it is changing by the hour. I mean, this bill just passed last Friday, right? So stay tuned. The regulatory agencies are still figuring out how the things in this bill are going to be implemented. So you want to stay tuned as the mechanics of all of this start to get clarified. Also, there could be more on the way. We don't know, but there's talk as of today of even more relief legislation that could be drafted. So let's talk about the economic impact payment. That's the name that they've given these $1,200 payments that I'm sure you've heard about at this point. They're going to go out to just about everybody, almost everyone. And what that is most people need to do absolutely nothing. In other words, IRS has your income information, and they'll either send you the payment or not send you the payment depending on how much money you make. So the thresholds for this are, if you're a single filer, you'll get $1,200 as long as your AGI is below $75,000 or below. You'll totally phase out at about $99,000. For married filing joint filers, $2,400. It's basically double all the above numbers. For single, AGI up to $150, totally phases out at $198. Head of household, you get $1,200 for AGI up to $112.5, and dependent kids that are under 17 and being claimed as dependents are worth $500 each. So, one very important thing about this: individuals who are eligible to be claimed as dependents are excluded from this stuff up here. So if you have a college-age student who's not really supporting themselves, you're still claiming them as a dependent, they will not be getting the $1,200. And, as a planning opportunity, you're being discouraged from trying to claim that they are completely on their own if, in fact, they are dependents. That's basically up to the 50% support test. Do you support them, or do they completely support themselves? If you want to get into that in more detail with me, we can talk about it. But all of this information for these economic impact payments will be based on your 2019 information if you have filed your 2019 return, or your 2018 tax return. So if you haven't filed yet for 2019 and it's more advantageous to wait, let's wait. The due dates have been moved to July 15th. If it makes more sense to go ahead and get this 2019 in, let's go ahead and do that. So there is some room here to do some planning around these economic impact payments. Just a couple more things about these. There's no more payments after 12/31 of this year. If you're a joint filer, you're each going to get a $1,250 credit. Notices, they're going to be sending out notices in the mail 15 days after they issue the money. So if you get a notice, but you didn't get the money, you're definitely going to want to follow up and figure out what's going on there. So according to the IRS site, there's no distribution details yet. They say to keep coming back to the page. I have a link to that. There's probably going to go out direct deposit. IRS is saying, or Treasury Department is saying that that's how they're going to do it. There's going to hopefully be a way to send the IRS your latest direct deposit information so that they have it. That could be kind of a nightmare if they're sending money out to the wrong place. So we'll keep you posted on that. And the way this works, so these are advance refunds for tax year 2020 that do not have to be paid back. So next year, there's going to be some stuff going on in your tax return having to do with all of this. You're getting the payment now, and just so you're aware that that's how mechanically this is going to work. Also, beware of scammers. Man, they're going to be everywhere. Phishing, trying to get you to fill stuff out online. Don't answer anything about this via email. Don't click on any links. Ask me if you're not sure if something is legit or not. I'll probably tell you it's not, because just assume everybody's trying to steal your money at this point. Couple other things to go over with this CARES Act, aside from the payments, is there's a 1-year change to the retirement plan rules, where normally you get hit with a 10% penalty if you take an early withdrawal from your retirement plan. They're waiving that this year. A 10% penalty does not apply for withdrawals up to $100,000 for reasons that are virus related, which that's a pretty broad category when you look at it. These can be repaid over a 3-year period. You can either repay it over a 3-year period, or you can pay the income tax over a 3-year period. I don't know if there's some sort of combination of those two things, but that's a finer point that we can look at in more detail, case by case. Withdrawals must occur in 2020. And the other big news here is that the RMDs, the required minimum distributions, if you're currently of the age where you have to take the money out of your retirement account, well, you don't have to do that in 2020. Those have been waived, so you don't have to pick up that extra income or pay that tax if you don't want to. Of course, if you want to, you can take it. Or if you need to take it, you can still take it. Good news on charitable contributions. Up to $300 now has been moved to above the line, meaning that no matter whether you're itemizing deductions or not, you get the deduction of $300 off your taxable income. So that's really good. Amounts over that then fall back to going on to Schedule A for itemized deductions. However, if you are itemizing, there's more relaxed limits and no more 50% limit on your AGI for those who are really trying to give a lot of money away. So that's been expanded. Obviously, the intent here is to try to get people to give money to organizations that need it, which is tough because everyone's looking for money here. But if you have it and you want to give it away, it's easier to get a tax benefit this year than it is in most other years. And a quick thing about student loans, there is an exclusion from income for payment of loan by an employer to an employee. In other words, your boss can pay up to $5,250 of your student loan debt without that counting as income for you. Normally it would. So the loan must be for your education, the education of the employee, not the employee's children. And the payment by the employer can be made directly to the lender or to the employee. It doesn't matter. And this is going to run through the end of the year. All right, let's get to the other really huge part of this bill is the pandemic unemployment assistance. The CARES Act massively expands and extends these benefits. And what this is a federal payment of $600 per week that's in addition to whatever you're collecting from the state. So the money's coming from the federal government. It's going to supplement state unemployment to the tune of $600 in addition to what you're getting from the state. So all of this, however, will be distributed through the state. So you're going to have to go sign up for this if you're in California. California has now finally acknowledged that this is happening just a few days after the bill passed. So they're saying they're looking into how they're going to let people sign up for this. And the huge news, I don't think I've mentioned, but the really big, the reason this is such a big deal is this is available to self-employed individuals. So at the very least, from my view, it's looking like self-employed people are going to be able to get at least $600 a week in unemployment benefits for many, many weeks to come. And so that's a very big deal, very needed. And you definitely encourage you, if you're self-employed, and most of my clients are, to take advantage of this and checking back with the California EDD site. Again, this is going to be one of the links in the slides. Check back with the EDD on a regular basis. They're the agency that deals with unemployment. If you have already done this or have been applying, please let me know how that's going. Be curious to be able to share that information with other clients. More specifically about self-employed, just to go back for a sec, this, of course, will apply if you're an employee and you lose your job, then, or you get laid off or furloughed or whatever it is, you can pretty easily go sign up. You give them the information. For self-employed people, it's a little trickier because you don't have an employer, right? You're your own employer. So what the EDD is saying you should do is when filing for your unemployment claim, you'll be asked for your last employer. If you own your own business or are self-employed, you should list yourself as your last employer. So that's the advice that they're giving as of now. Same for independent contractor. It basically means the same thing. You should put yourself down as the employer, and apparently they're going to accept that. So again, if you're in the process of doing this, let me know how that's going. If you have an S Corp, you will put the corporation as your employer, because if you're running payroll, that is what if you're following the S Corp rules, that's what the situation is. So go ahead and use the S Corp as your employer. If you're not running payroll, then you might want to go the self-employed route. I think we'd have to look at that on a sort of a case-by-case basis. And the really big news for small businesses and self-employed people is this Paycheck Protection Program. Now, this is different from the unemployment situation. That's for individuals only. This applies to small businesses and to self-employed individuals, which is independent contractors, which is kind of a huge deal. So the application process, as you can see here, starts on April 3rd for small businesses and sole proprietors that have payroll. Starting April 10th, independent contractors and self-employed individuals can apply for and receive loans to cover their payroll and other certain expenses through existing SBA lenders. So this is going to happen through banks. Private banks are going to sort of open up lending windows, so to speak, and you apply through them, and they fund your bank account. Now, the really big news here is that the loans will be forgiven, meaning they don't have to be paid back, as long as the proceeds are used to cover payroll costs, mortgage interest, rent, utility costs over the 8-week period after the loan is made, and employee and compensation levels are maintained to where they were before all of this happened, right? So if you get the money and you keep spending at the rate on these costs as you were before, then they're saying they're not going to make you pay the money back. That's pretty unbelievable. So please stay tuned for a future video breakdown of how this actually is going to work. But this is the information that we have. And again, beware of scams surrounding this Paycheck Protection Program. So for self-employed, this is huge. What we're looking at here is, and this is a statement from the text. This is language that was in the document that I found regarding this. Wages, commission income, or net earnings from self-employment capped at $100,000 on an annualized basis count as payroll costs. So your net earnings from self-employment that you use to live off of counts as a payroll cost when technically it's not payroll, but they're going to let it be counted as a payroll cost toward this amount of money that can be forgiven in the 8 weeks after you receive the loan. So again, something to really consider doing, even if you're a freelancer or just self-employed. You might be able to get some forgiven loan money on this side over here, and also go back and be able to collect this pandemic unemployment assistance. Can you do both? I have no idea. It might be possible, but to be able to run your business, as though, or to have income coming into your business to keep it alive, as though nothing has happened, is really an extraordinary thing to be able to take advantage of. And finally, here's the last page, are some links. You can click on these when you download the slides, so feel free to do that. And again, please comment, let me know where you guys are with all of this stuff, any questions that you have, so that we can all see where everybody is and what they're doing and the experiences that they're having. So in the meantime, look for updates from me. And as always, be well. Thanks.